There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The payments professor sparks revelations. No need to fear the Fed now.
Hey everybody, Payments Professor here, and as you've watched the previous episode, I got my friends together and we were talking about what's happening in the world of electronic payments in 2024. Now what we're going to do is we're going to give you all a Christmas present, a New Year's present, and we're going to talk about the things we expect to see in 2025. Real quick, some introductions. Joe, who are you?
Hi, I'm Joe Casali. I'm from Niche, and I do the Wrestling Payments podcast. Easy for me to say.
Mr. Tapling?
Peter Tapling, PTap Advisory. One thing that I forgot to mention in episode 1 is I'm a board member of the U.S. Faster Payments Council.
Well, yeah, that does deserve mentioning. Congratulations on that. I know you're doing good things. And finally, keeping it confidential with Mr. Huff.
Hey everybody, Tedd Huff. I'm the founder of Fintech Confidential, as well as Voliere, an advisory firm.
Okay, now to get things started, last time we let Ted lead us off. Mr. Tapling, I want to ask you to get us started here. What is your biggest prediction that you think is going to happen in 2025?
I think that we will see a settling out of banking as a service. I think that we talked about it at the very end of the last one. We're kind of coming out of the trough of disillusionment with banking as a service. And as we look to things like Dodd-Frank 1033 open APIs, we looked at things like more faster payments use cases. We looked at things like, what am I going to do with crypto? We just saw an announcement where Apple Pay is now enabling paying in to Coinbase for crypto. So we're creating that traditional payment to crypto bridge. Those are going to be enabled by fintech applications, and those fintechs need bank service partners.
Okay, but are we going to see regulation to help to make that happen? Because, I mean, I didn't know about Apple doing that. That's news to me, so thanks for sharing that. And I know you've said it before, but if there's not rules to play by, I don't see it happening that much in the U.S. So I
think with banking as a service, and I'm interested to hear what Ted and Joe have to say on this, but I think we do have the rules. I think the challenges we saw in the last year or two was that a lot of parties, the fintechs, the sponsor banks, the middlemen, were moving too fast and not following the rules. You can't have an enforcement action if there's not already a rule. So I think we have the rules, and I think people are being much more careful about following them.
Well, I would disagree with you. You can't have an enforcement action without a rule, but that's for another day. Yeah, I don't have the oh ho ho no shirt, so I couldn't do that.
Well, no. Have you guys heard Elon Musk is going to get rid of the CFPB? Apparently that's one of his things. You know, he's in this new, I mean, okay, first of all, it's hilarious to me. We're going to create a new government agency to get rid of extra government agencies.
Well,
okay, that right away doesn't make sense, but I think you got to do that. And
I think that one of the things,
CFPB.
Mr. Musk is going to find out how the federal government works. It took an act of Congress to bring it into to create the organization. It will take an act of Congress to take it out. I think that they can rein in what the Bureau is doing. I think it would be really difficult politically to remove the Bureau entirely. Is it impossible? I'm not a constitutional scholar, so I can't answer that question. But my perception on some of this stuff is that if you tell people what you want to do and they push back, you get something less than what you want to do. If you tell people some really wild, crazy thing that I'm going to do and they push back a little bit, you might get what you actually wanted.
Yeah, you're quite right about that. That is a tactic that has worked effectively for me in my life, and I know that it is a good one too. But
Joe wanted to sneak in. I want to hear what Joe has to say.
I didn't want to sneak in. As you're talking about these predictions, and given the new administration, do you think it introduces turmoil into any of these things?
Oh, 100%.
Totally.
Does that just?
I think the new administration is turmoil, but yes, I think it's going to bring some turmoil too.
My perspective is that you're going to almost see like a freeze frame happen for a lot of these things where nothing new happens, but nothing continues either, right? So like you won't see a change, but you also won't see continued behaviors. And when I say that, I'm meaning that from a regulatory perspective, from an enforcement perspective. You're going to see all of that just kind of freeze in place. And I'm guessing that's probably going to happen for the first 2, if not 3 quarters of next year, uh, while they're trying to figure out what do they actually rein in, what do they actually let loose, like trying to really figure those things out. And that's the biggest piece that I'm seeing, because we're still seeing, and I hate to say this, but we're still seeing the fallout from FTX, and that's years ago, right? So I think they're going to be watching, listening, learning, taking all the open lawsuits, letting them play out, figure out where that's at. And then towards the end of the year, you're going to start to see some things fast and furious happening. But people are already, and Peter, you're probably seeing this too, is like there are companies out there that are already saying, okay, how do I make the most of 2025? And I think,
By the way, some companies on that list are financial institutions. Financial institutions are looking at this change of administration and saying, where is their opportunity?
totally. And I think with that freeze frame, as I called it, happening, that gives a lot of opportunity to try a lot of things really quickly. And I know financial institutions don't typically move quickly, but they can start to get feedback during that period of time to really move the needle.
Well, you know, one of the things in his comments for this was there are too many agencies that financial institutions have to answer to. And Joe, I know you and we do a lot of education on that. And the first thing we start off with somebody new to banking is the alphabet soup of understanding FFIEC versus NCUA versus OCC, who's governed by all of these. FDIC got to throw in there too. Oh, and then don't worry, there's also some NACHA rules, RTP rules, FedNow rules, depends on what rail rules you got to do. It does get confusing, but I can't believe I'm saying this. I like the CFPB. I think they're doing more than they should be doing, but I think that there does need to be a consumer body in control of Reg E, because I think they've made Reg E easier to understand. I just think they're going beyond the scope of Reg E and some of that stuff. And that's where maybe they're becoming a problem.
Scope creep. Well, like I said, if you threaten to shut them down, you have the opportunity to reel them in, and that might be the objective.
Yeah.
Joe?
I hope you're right.
Yeah,
In fact, I got to say, one of the things I want to see in 2025, and I think that the CFPB would be in a great position for this, I want a fraud czar. And I'm serious. It's a concept I didn't come up with. It's one I heard at Money 2020. I've heard others talk about this in other countries of doing this as well. But we've got a fraud problem globally with money. Well, duh, because people are going to steal it whenever they can in any way they can. We all know about APP fraud happening in the UK and or actually Europe. We hear of with Zelle a lot here. We know it's going to happen here as RTP and FedNow grow, but then the check fraud is just insane. Why can't we get one agency to be in control, overseeing all of this, and give us some better guidance, better rules of what we really have to do to enable the good money to be able to flow?
I have a response. So I forget the example of this, but the example of this is, yes, you hear about all those frauds. They're terrible. They continue to happen. We have to do something about this. We have to band together. All right, see you tomorrow. Nothing happens. Nothing. I mean, nothing. There's nothing that happens. And the hardest part about this may be people have to change their behaviors.
Yeah.
Right? People have to take ownership. Well, I mean, the things I'm hearing, and I don't pay attention a lot because I just want to know when the answer is out. I don't want to hear the story along the way. But the idea that the bank is going to take responsibility for Reg E claims for any losses, why? They didn't buy the kitten off the internet. Why is the bank paying for it?
I have a great idea. I think that whenever anybody steals cash from you, you should be able to go to the Bureau of Engraving and get your money back.
There you go. Government will foot the bill. Great.
I mean, so 100%, Joe. I do think we need to have a lot more focus on personal responsibility. And if somebody was walking down the street in New York and went and dropped $100 with the guy doing the shell game and lost $100 in cash, they wouldn't think of going to their bank and asking for that $100 back. They know what they did. They know what the outcome was. I do think, in fairness, one of the things that digital payments has enabled is it's enabled those bad transactions that happen in much higher dollar volumes, right? It's really hard to lose $5,000 to the shell game guy on the street in New York. Not so hard to lose it to the guy who's going to send you the white puppies. Not.
So I think what I would like to propose in this discussion is that we separate out fraud
100%
from scams.
Yeah. Well, yeah,
Yes.
I agree. Okay, the Fed does have a
Because
fraud
those are different.
classifier
Yep.
and a scam classifier because they're different. And a bank
And-
shouldn't
and
have to pay
yeah,
for
and when you
it.
talk about
we are
yeah,
in
when
a-
you talk
in a-
about checks, Kevin, that's pure fraud. That's bad guys doing bad things. Never, no participation at all from the party who lost the money. So 100% agree with you, Ted.
Well, I wouldn't say 100% not the participation in the party, but I would say it is dramatically close to that 100% number. And we look at these scams, right? And honestly, I yesterday got an email that if I didn't look at fraud and scams on a regular basis, and I have investments in a handful of small companies, and I've done it, and honestly, sometimes I forget which ones I've invested in. And so I got an email from a company that looked a lot like a company that I've invested in the past, and something just told me, "Hey, Ted, don't click on the link."
Yeah.
Was it AI?
So I was going to say, we get to go into AI, right? Anybody who's been subject to the Nigerian 409 scam, I'm a prince and I need to send you money, will notice that in the last year and a half, those emails have gotten way better, way
Yes.
better. Like they're really good. And so, Joe, I will tell you in answer to your question of where's AI, the bad guys are using the heck out of it, right? Particularly generative AI. On the financial institution side, we've been using AI for decades. Anybody who ever got a car or a house was subject to a FICO score. That's an AI model. But the question really comes up, nom de guerre, is generative AI, and what are you generating? And so in the stream of a payment, that's showing up a lot more in case management, in customer service, et cetera, not really in the flow of the payment.
Oh, wow, there's so many directions
So
to go all of a
it's funny
sudden.
you bring up AI, because what I did is I literally took a screenshot of it, threw it into a couple AI models, and said, "Have you seen this before?"
That's brilliant.
And two of them came back and said yes. And then I said, "Is it known fraud?" And it basically said, "I don't know." But then I used a different AI model to do a recursive search on the super long UTM link that was in there. And it came back and gave me a list of all the redirects. And at the end of it, it told me, because at the end, it told me that it was a malicious link at the very end. So that's one of the ways that I think AI can work if we're using it right, because it's going and doing things that I wouldn't have thought. I mean, I thought about it, but I didn't think about going that deep.
As much as I'm a guy who just said I'm a fan of personal responsibility, I don't think the average consumer is going to rip out the UTM in a link and feed it into a bunch of AI engines to figure that out. We got to make it easier than that. Joe, are you going to do that?
I thought of doing that. I think that's great. You could do that. That's brilliant.
You asked me and I took a picture. Sorry.
All right. Another topic that I got to hear from you guys too, because it's one that we talked about a little bit off camera before we came on here. Rules for crypto. Is there going to be rules finally for crypto? Why would we need them? What would it actually do?
Let me jump in just for a second, and I'm gonna throw up on you for a minute.
Please don't. Not on camera.
You mentioned uh, FTX
Yes.
and even different topic, but Synapse.
Synapse, yeah.
These were not a problem with the crypto. These were problem with the business, right?
Boom.
So the businesses are don't know how to do the business part of that industry. And when you talk about government, there's not a lot of government regulation. I disagree. I think it was North Carolina that just passed a law that they will never allow the use of CBDCs in their state. So there's a lot of
Multiple
laws
states
out
have done
there.
that.
One saying we're going to use it, one saying don't come near us. It baffles me, and I'll kick it off with this. It
Yeah, yeah.
baffles. This was created. This system was created to bypass government, to bypass everything. I just want to send money to you guys. I don't want the government to know anything. And now we're trying to put a structure and a government and a banking around it. It's resistant a little, Peter.
So I 100% agree that FTX has more in common with Bernie Madoff than anything related to crypto. I agree. Remove that from the conversation. I will say that you asked a question: would regulation really help? And the answer to the question is, I think it will. You said, "Oh, these things were brought into being to remove financial institutions." That was Bitcoin, one scheme, right? I think the more productive schemes are going to be stable coins, the ability to have tokenized deposits. JP Morgan Chase, under their what used to be called Onyx, it's now called Connexus business unit, has a capability called JPM coin, which allows JP Morgan Chase customers to do multi-currency balancing instantly across borders. That's a pretty cool application. That has a lot of economic
Not only
benefit.
that, but it allows them to actually do funds transfers cross borders
Correct.
in near real
Correct. So
time
I think that
in multi-currency. Like it's huge.
we have a lot of opportunity that distributed ledger based systems can bring to us, but we need guardrails. We need people who are participating in those ecosystems to understand the rules under which they're participating in the ecosystems. The last thing I will say on this, I think the SEC is the absolute wrong entity to be writing those rules.
Agree.
Yeah, the
And
only
that's
SEC out there is, the Florida Gators, Alabama, Tennessee Volunteers. That's the only SEC I want to listen to and follow. Because I agree with you, though, there needs to be something. Because my biggest thing is when I tell people that my fear with crypto is when it's going to pay for human trafficking, it's going to pay for child slavery, it's going to pay for, illegal.
I had that same problem with cash too.
Yeah, I was going to say that happens with $100 bills.
I agree, but at least let's keep it at just cash because there's a whole generation doesn't even know what cash is, so maybe will eventually go away.
Well, so keeping on the theme of DLT and stable coins and crypto, the thing I see starting to happen in 2025, although it may not be apparent in press releases and news and all this fun stuff, but I think you're going to start seeing more financial institutions start to put together a way to run a tokenized ledger side by side with a fiat ledger. And when I say tokenized ledger, there's a super important distinction in that is it tokenized real world assets, stable coins, other digital assets, all of those being on the balance sheet for the consumer, maybe not the bank's balance sheet, but the consumer's balance sheet, and the financial institutions that are leading in this area are going to run these things side by side so that when I log in, I can see all of it. And I think JP Morgan's probably going to be one of the first ones to come out and talk about that, because if you look back over the past few years, look at the acquisitions they've made. I think they're primed and ready to do it, if not in 2025, really, really soon.
You know what? Visa, MasterCard have made some of those types of acquisitions too.
Well, now of course they're fighting on Capitol Hill. I mean, just last week they were on Capitol Hill trying to defend themselves. Now, unfortunately, the the senator wasn't well educated in the four-party model, but we can't expect them to understand our highly complex payments and banking ecosystem. So,
which by the way, makes comments like we're not going to do it really dangerous, because the people who are saying we're not going to do it don't understand what the it is that they're not going to do.
exactly.
Switching gears, just like my camera automatically switched. I don't know why. I know I'm glad I have a backup camera on because my main camera is still on, but for some reason we just switched to my backup camera, so I might look different now. One thing I got to say, and it came out today. It's news that just dropped today that is in 2025. The RTP network is now going to go to a $10 million limit on transactions. So here's my prediction. Fed now is going to raise their limits. I know I'm getting bold. I'm getting crazy with something that just, may or may not happen.
Were they going to go 10 million in one?
Their limit
No,
right
they're
now
gonna
is
go to 1 million.
500,000. I think they'll
Half a
probably just go
million.
like 2.5 million, at most. I don't see them
Yeah.
going super high because they're ultra conservative. But I do think there'll be some pricing wars.
So I would say, well, a couple of things. One, Nacho went through and did this analysis for same-day ACH, and something on the order of 98.5% of all payments are under $1 million, right? So the $10 million limit definitely opens up some opportunity. It will drastically increase the dollar volumes that we see, but it's not going to increase the unit volumes very much. The number of transactions is not going to be that high. And for corporates who might want to use these capabilities, they still have an exception. And the exception is I have to build a business process that says, if it's up to this limit, do it this way. If it's over this limit, do it another way. They'd rather not have to make that decision. And so they have it working today over pick your payment rail, ACH or wire. And so in order to get them to move, the people who are going to move are those people where all of their payments are under $10 million because they're going from a system with no exceptions to another system with no exceptions. Separately, on the Fed Now limit thing, they can raise the limit, whatever. The limit in Fed Now is not their problem right now. Their problem is reach. If they think that raising the limit can get them more reach, yay. But as you pointed out, they're a little bit more conservative. So I think that I predict in 2025, we will definitely see a Fed Now limit that's at least $1 million.
Joe, Ted, 1 million going once, 1 million going twice, 1 million sold to Peter Taplin. I think it's going to be higher. I think they'll go 2.5 because there's that competitive nature between the two. But I also got to say, I think it's good. I think that's what shows.
But 2.5 basically says I lost. I just didn't lose by as much.
What's the over/under on that? And can I use instant payments to bet for it? But but I think this shows that the competition between the two is good because the winner ends up being the users overall because you have the choices between the networks. They're going to compete with each other, and I think that will help drive some innovation too.
So I have two problems to talk about. One,
only two, Joe.
Only two
to talk about. Inside voice. I don't know about the limit. They may. For me, I see this 10 million as we're going to differentiate ourselves. This is the extra market we're going to get by doing that. The Fed being conservative and prudent, I think they may say, we'll consider that, but we're still just building our network up. The other thing is, for the ACH, the Fed's an operator. For Fed Now, they're a participant. They're a vendor. Why aren't they an operator? Why aren't they processing RTP transactions through a network? Why are they competing? Why are they in two different ISO formats?
That's an existential question. The rest of the world is asking the United States.
Yes. I just don't get it. And will there be any pressure to say, What are you doing? Knock it off. Just
I think your next guest on wrestling payments should be Jerome Powell.
oh, okay. I will
And you
come
can
to
ask him this
Jerome,
question.
Get him in touch with Joe Casali, Wrestling Payments over at H.
Yes.
And Joe, I've been asking that question since day one.
Well, I can tell you that I can give you the marketing answers that the Fed gives. We have 2 rails for every payment network, payment systems resilience, community financial institutions, air quotes were left out of TCH, not a true statement, et cetera. But the end of the day is we have in the United States created this bifurcated environment which slows everything down, right? And earlier, we were talking about cross-border payments and the overlap of cross-border and instant. Joe, you brought up that TCH says, we're going to differentiate by going to $10 million. I think it was one of the Fed governors, Waller maybe, made comments about engaging with India to do cross-border instant payments between FedNow and UPI. To me, that's a red herring. That is not your problem. You are not generating volume because you can't send instant payments over to UPI.
Only receiving for people here.
Agreed.
So dare I bring up ISO 20022?
Oh, dare you.
Yeah, that's our topic for us to be able to close on right there. Let's do it.
I dare you to do it.
What do you have to say about ISO 2022, Ted?
Well, I mean, aren't we kind of going to get forced into it with Wire changing
Wired
format
by February
to
for
that?
Fed, yeah.
And does that change any of the discussion we just had?
It does. And my reasoning is, okay, RTP Fed now, they're both on ISO, but they can't communicate because they've used ISO differently. To me, what ISO really does is it's just more of it's not a true programming language, but it's a formatting that is available to run with programming languages that allows for the instant message capability to go back and forth so that the money movement can take place. So it's just a standardization that gets bastardized in some ways, I got to say, too, because everybody makes it their own. Yeah. It's
standardized?
The standard that's not standard?
So we see so many different flavors. I mean, I can always use the comparison. It's like Spanish. If I speak Spanish in, Argentina versus Mexico versus Madrid, a lot of what I say will be understood. Will everything be understood? No. And it's not just because it's me speaking it. It's because there's terms that are different and used differently.
So I guess my main point in that is that I think things like that are part of the reasons why we are seeing potential slowdowns in adoption of the other 2, is because that is a channel that's already being used. That's a channel that's already being done, that already has players in the market, that already has all these different things in place, and they're having to put the energy over there versus looking at solving other use cases. And that was my main piece. I think that's you're gonna see more pushback and more.
I think the problem there, Ted, is momentum. If I were going to start from scratch today and build a system, and I had a choice, I could build the system using tag value pairs. I could build the system using the Nacha file format. I could build a system using ISO 8583, or I could build it using ISO 20022. I would 100% choose ISO 20022, right? Nobody understands the Nacha file format unless they go to Joe's Nacha file format class. But the bottom line is ISO 20022 is a good thing. We have the computing capability, we have the storage capability, we have the data communications capability. There's no reason not to have as rich a message as possible. I think one of the things that we have a big miss on is for years we've talked about the wonderful straight through processing that will be achieved by ISO 20022 and rich messaging, and you're going to get all the remittance informations on your payments. I have asked every faster payments professional around the world, how many in the wild REMT 001 messages have you seen? Answer, 0. We're just not doing it yet. And I think part of it, Ted, directly to your point, is that momentum. their back end systems, the customers, the users of these payments, they don't know what to do with that, right? And let's go back to a comment we made earlier. Financial institutions, by and large, are pretty bad at building brand new products that do hip, cool things. And so I don't think that ISO 20022 is the reason people are not adopting faster payment schemes. I hear a lot of nobody's asking for it. Joe and Kevin are probably sick of me saying this. No one's ever going to ask for it, right? They're going to ask to solve payment problems, and instant payments can solve a lot of them. And they're never going to ask for ISO 20022. When was the last time you had a conversation with someone and asked them, are you using Novell or TCP/IP as your LAN backend? Right? Nobody cares. ISO 20022, 5 years from now, we're not even going to talk about it.
Peter, I couldn't agree with you more. I even do an hour-long session on listening to what account holders are saying, and they'll never ask for FedNow or RTP, but they will say, where's my money? Can I do this faster? Guys, we are going over on time. We've passed the mark here. I definitely want to hear two things from you. First of all, what's your number one prediction you think is going to happen in 2025? And number two, how can people get a hold of you if they want to argue if they want to use your services over any comments that you've said in here? So Peter, well, how about you first, sir?
Well, first of all, I welcome the arguments. I love having this conversation. So reach out to me. I would say two. Let me see. You asked for two. One, I do think under the new administration, we will begin to see the beginnings of more guardrails around crypto. Two, I do believe that we will begin to see 3 of the large financial institutions that are not on FedNow get onto FedNow so that they can begin having more reach.
Well, 2 is actually how do they get a hold of you? But I love that you threw in the second one there.
Oh, best way to reach me, reach out to me on LinkedIn. Turns out there's only one Peter Tapling on LinkedIn. How'd that happen?
All right. And PTap Consulting. What about you, Joe? What's your, well, I got to give you 2 now since Peter said 2 predictions. But if you only go with 1, it's okay. But then how do people find wrestling payments?
Find wrestling payments. LinkedIn works. Wrestling payments on YouTube works. That's probably the best. Prediction. My first prediction would be not a whole lot's going to happen in 2025. Just more of the same. And I'd agree with Peter as far as there is an administrative interest now in moving crypto forward. So,
all right, and finally, Mr. Huff, what are your predictions, and how do we find you?
Oh, well, I think I kind of already brought one up, so I'm going to just do a little bit of repeat. I think we're going to see a lot of people trying a lot of new things during the time of the freeze frame that I talked about. I think we're going to see a lot of people trying a lot of different things before all of these rules start to get put into play, as Peter had mentioned. Secondarily, I started off the last episode by talking about the volumes that are going through all of these different ways of moving money quickly and easily. I can't help but say I think we're going to see an astronomical increase in the usage of these because of the state of people's income. And I think you're going to see that happen because things that used to not be important and didn't have to be done right now have now have to be done now, have to be paid now. And I think you're going to see a lot of that. And if you want to reach out to me, best place to find me personally is on LinkedIn. But of course, head over to fintechconfidential.com, sign up. You'll get notified every time we release any episode or new information.
All right. Well, thank you all for being here. I am Kevin Olson, the Payments Professor. My prediction, I think we're going to see a lot happen in electronic payments, and this is what I will predict. Joe Casali, Peter Tapling, Tedd Huff, they're going to be there to guide you through, inform you about what's happening, give you some points of view, arm you with the information you need. So make sure you go out and follow all those guys. And if there's a topic or there's maybe somebody you think that needs to be on the payments podium, get a hold of me, Kevin. It's Kevin at paymentsprofessor.com. I will do all I can to get that speaker, to get that topic addressed. But for now, this is where I say, class dismissed.
There's a world out there, it's a digital maze where dollars move in mysterious ways. Complex systems, rules, and regulations. The Payments Professor sparks revelations.